The EUR-USD pair oscillated significantly today. Despite increased volatility, it remained within the 1.7 range. Traders were unable to determine a clear price movement direction, reacting impulsively to conflicting fundamental signals. Today, Jerome Powell and Christine Lagarde expressed their positions. The ECB president and the Fed chair spoke at a forum in Sintra, Portugal. Additionally, key inflation growth data in the Eurozone and JOLTs data in the US, the number of private sector job openings at the end of the reporting month, were published. Judging by the market reaction, this saturated economic calendar overloaded the system. EUR-USD traders are cautious and remain within the 1.7 range. This is not surprising, considering the contradictory rhetoric of Powell and Lagarde. Specifically, according to Fed Chair Jerome Powell, the latest inflation reports indicate a slowdown in consumer price growth in the U.S. Powell acknowledged that inflation has, again, begun to slow after a brief period of acceleration. Essentially, Powell stated the obvious as the latest TPI and P growth reports in the U.S. came out in the red, and the core PC index, the most important inflation indicator for the Fed, fell to 2.6 annually, the slowest growth rate since March 2020. At the same time, while acknowledging the obvious slowdown in inflation, Jerome Powell did not announce a monetary policy easing. He stated that the central bank needs more data before proceeding with a rate cut. This indicated that the rate would remain unchanged in July, and future decisions would depend on inflation dynamics. Notably, after Powell's speech, the likelihood of a 25-point rate cut at the September meeting increased to 65. However, the dollar maintained its positions and even attempted to counterattack in the EUR-USD pair. This suggests that the market has already partially priced in one rate cut this year. Hence, the dollar remains stable, despite the dovish rhetoric of the central bank. Any signals of maintaining the status quo continue to support the U.S. currency. Today, Powell managed to deliver both signals. On one hand, he noted the slowdown of inflation in the U.S., but on the other hand, he stated that the central bank needs additional data. Additionally, the Fed chair did not specify the conditions under which the Fed would begin easing monetary policy. He also did not comment on the pace of rate cuts, thus not refuting the updated Fed dot plot, which forecasts only a 25-point rate cut by the end of the year. Therefore, the Fed chair maintained balance in his rhetoric, proving useless for both EUR-USD buyers and sellers. Each side heard what they wanted, but overall the balance remained even. Christine Lagarde also attempted to maintain balance in her rhetoric. She stated that the EKB currently does not have sufficient evidence that the inflation threat has passed. In this context, Lagarde indicated that the regulator would not rush to further rate cuts. This seemed like a positive signal for the euro, especially against the backdrop of today's inflation growth data in the Eurozone. However, the single currency responded modestly to the EKB president's speech. The EUR-USD pair impulsively rose to the resistance level of 1.750, the middle line of Bollinger Bands on the done time frame, but then retreated to its previous positions. Such a phlegmatic reaction is explained by the fact that Lagarde, in her speech, referred to the July meeting when she said that there is no need to hurry. The market already expects the EKB to maintain the status quo in July. The next regulator meeting will be in September, by which time the EKB might be ready for the next round of rate cuts, especially since Christine Lagarde stated today that inflation is moving in the right direction and that the central bank has made significant progress towards disinflation. Recall that a few hours before Lagarde's speech, key inflation growth data in the Eurozone were published. It was found that the overall consumer price index in June fell to 2.5s, while the core index remained at the May level of 2.9. The EKB president could have emphasized the slow pace of CP reduction, but instead, she delivered a balanced rhetoric. EUR-USD buyers reacted positively to her speech, but the upward momentum faded quickly. Thus, Powell and Lagarde acted according to the principle of a little something for everyone today. The Fed chair acknowledged that inflation is slowing, but did not announce a rate cut. The ECB president, in turn, suggested a pause in rate cuts, but praised the pace of inflation reduction. The pendulum remains balanced. For EUR buyers to confirm a northward movement, they need to break above the 1.770 mark, upper line of the Bollinger Bands indicator on the 4-hour chart. Sellers need to push below the 1.680 target, lower line of Bollinger Bands, on the same time frame. At the moment, the situation is too uncertain to open any trading positions.